Yeah, right.
Do we need to wait for the attorney to come back, or? Okay, I just want to make sure.
Can we get a copy of that, or is that strictly for council?
Right now, until council approves it, and then releases it with the meeting minutes, it's not for public record.
Okay, I will take this time to go ahead and introduce myself. My name is Derek Hall. I am also with the Department of Treasury. I was the one that was here that did the majority of the field work. And what you have in front of you now is a few specific pages from the 2013 audit report. What we're going to do is briefly look at the snapshot in time. I feel like I'm echoing. Is that better? Okay. A snapshot in time of what the numbers state as of March 31st, 2013, and as curious to explain with no thorough assurances as to what they may mean, but with the current numbers as the way that they are, this will give you an idea of what the projected ending fund balances are as of this time. And then at the end, we have the findings and recommendations that Carrie discussed, and then we'll go through those. If at any time you have any questions for me, stop me then and there. I prefer to answer questions when they're relevant rather than trying to go back to them and trying to remember where we were at or what page we were on. Because as I noted to you, this is not the full report, so it's not going to be in any kind of page number order. That being said, the first page that you have is the balance sheet for your governmental funds. On this page, you primarily have two numbers that most people like to look at. The top line is your cash balances, and then about 2/3 of the way down you have your fund balances. Now the thing about this is the way that financial statements are set up now, we have your major funds in the front, non-majors in the back. Your non-major funds we'll get to in a moment, so we'll focus primarily here on your general fund, major street, local street, and fire funds. One of the other things that you'll notice too in regards to this is you have a couple other funds that you account for and budget for that you will not see in this report. When GASB 54 was implemented during this time period, because your cemetery and your street operations are funded by the operating millage, they don't necessarily have any true restrictions on them. They cannot be segregated into their own funds unless council makes a specific resolution to commit those funds. Because no such resolution was made, these funds are now combined into the general fund. So if you look about 2/3 of the way down in the general fund, you see an area now where it used to just be fund balance would have reserved, unreserved. They've now expanded this to 5 classifications. Non-spendable, restricted, committed, which we do not have because those can only be created by actual actions of the council, assigned amounts, and unassigned. We know by the breakout of your budgets that you are potentially assigning the potential fund balances in your street fund and your cemetery fund, and that's why they disclosed here as your street projects and cemetery. If you were to look at any kind of a print off from your BS&A system in regards to those specific funds, these would be the fund balances in those funds. The other thing is, if you look just above, you also now have what's called a non-spendable amount. Non-spendable basically means it is not there in the short term, it's not available like cash to be spent, or a receivable that's expected to be collected within 60 days. If you look at your bottom line, it says a total fund equity of $2.5 million. Of that, $1,056,000 is not necessarily spendable. That is related to prepaid expenses and the amount above that's also related to due from other funds, primarily amounts due from sewer and water funds. Because those amounts obviously are not going to be repaid in the short term, as those large amounts still exist to this day in one form or another. So this is a change from any of your prior statements also in the fact that you now have these new levels of classification in your fund balance based on the new GASB pronouncements. Makes it a little bit harder to understand, I know, so bear with me. Next two columns, as I said, are your major street, local street funds. You can see what your cash balances and fund balances are for them. But usually at this point, then we go into the next page, which is your income statement. We can look at the revenues versus the expenses and kind of give you an idea of what the actual activity was for the year. In regards to your general fund, you can see that you have total revenues of $1,579,000, expenditures of $1,878,000, for an operating loss of $298,000. $71,000 was transferred to other funds to assist in their operations. So you had an overall net loss in your general fund of just over $307,000. The major street fund, revenue of $415,000, expenditures of $418,000. $50,000 was transferred to the local street to help with its operations. So you had a net loss in your major street fund of $53,500, decreasing its bottom line from the $908,000 to the $854,000. Local street fund, revenues of $77,000, expenditures of $69,000, $50,000 coming in from the major street fund, helped increase its bottom line by $57,000. And then the fire fund, which is the special assessment, revenue of $225,000, expenditures of $297,000, for a loss of just under $73,000, decreasing the bottom line from $186,000 to $113,000. So for the most part, you pretty much lost money in all of your major governmental funds. And the one additional thing as we talk going forward is your property tax values, which is your primary source of revenues, still seem to be a little volatile, still seem to be in declining, so it's something to keep an eye on. And I'm not exactly sure what the effect of the proposal is on the personal property tax and how you're going to be reimbursed with that. That is one question I still cannot answer because that's still being sorted out from the last election itself. So, a couple things to keep in mind with that. Your other primary sources of revenue, the revenue sharing, the Act 51 funds, those finally seem to at least be stabilized. They don't seem to be going down as much anymore. So at least those, even though they're still at levels of about 10 years ago, they don't seem to be declining at the same rates they were. And obviously, if you've heard about the governor's budget this year, they're trying to even restore it to higher levels. We'll see how it works. Obviously, it's an election year, so things can change. Overall, financially, this is the snapshot as of March 31st, 2013 of where you're at with these funds. Any questions?
So over a 1 year period, that's over $500,000 loss, right? I'm looking at it, a couple thousand or so.
For all these funds combined, the net loss was $384,000. $370 in the general, $53 loss in the major, $57 gain in the local, $73 loss in the fire, and then $55 gain in the non-majors. The non-majors we'll get to here in just a few moments.
So what's the change in that position? These are a bracket, 685,000.
Okay. The change in net position refers to the GASB 34 statements. It's Exhibit A and B, which I don't usually bring because you, as a council, budget with fund balance is your major goal. GASB 34 converts everything into a statement of net position where we have all of your capital assets and the debt included on the face of the financial statements. in regards to that $685,000, that is the depreciation expense on the village's capital assets for the year. So that's what that loss is.
You're talking about the total village capital, right?
Yes. Yeah, the thing is what GASB 34 is trying to do is look at the village as a whole, including all assets and all liabilities, like I said, including capital assets and debt. What I wanted to do here was just focus on how the statements that are going to give you the numbers that are based on what you're used to budgeting by, which is normal revenues, normal expenses, and coming down to fund balance. With the primary difference being fund balance answers the question, how are we as of today? And again, that's why I emphasize that this is the snapshot in time of this day. A and B, when the reports come.
Here, these numbers are on for 2012.
The beginning balances are based on the 2012 that we completed, yes. That's where the beginning numbers do come from.
Question, on exhibit B, page 11, we're showing other revenue as for total government funds under the general. It is minus 128,000. Can you explain how we can get negative revenue?
That includes the loss on the sale of the land.
Oh, so it's the sale on that land.
Yes, I believe the ones that you guys had on your slideshow is recorded as a loss, as they mentioned on your financial statements. I don't remember the exact year. I believe you guys had it rounded at 217. Okay. So right now, this is the way it's currently reflected on your financial statements. And again, because we don't know the final outcome, that's why it's reported as the way that it is. Again, part of the doubt.
So that contributes to that $685,000.
No.
Is that part of the asset that's included?
No, because that amount was listed actually as an asset. It was listed as inventory held for resale. Because the initial plans that the council had, and obviously this is to some of you, a prior administration. Trustee Hill, I know you were part of that board at the time, so bear with me because I'm having trouble remembering who was which one. The initial plan, though, that was there was that you were going to purchase all of those foreclosed properties, and then you were going to try and resell them and have the village take the gain and use whatever that you could towards other projects. And obviously, it did not work out that way. Well, but we still have the overall net loss of the 217,000. So.
That was one transaction.
And that's, like I said, this is going back to what Carrie talked about with the word doubt. Any other questions before we flip the page? Okay. Let's go to the next page. And this is going to be the balance sheet for your sewer fund, water fund, and the non-major funds. The non-major funds consist of the building department and the newly created trash fund. This was the first year that the trash fund was created based on the 2011 recommendation that we had, where the trash was previously recorded in the sewer fund's activities. Now, these statements are different than what your governmental funds are. These are basically kept as like a regular business would. You were going to see these assets and the debt on the face of these financial statements. What you'll see at the top line is the available cash to spend as of this date. $63,000 is what's available for the sewer, nothing for the water, and then the $103,000 in the non-majors, which we'll break those out in just a moment. And then about 2/3 of the way down, you'll see what's called non-current liabilities. Installment purchase agreements payable, and then primarily bonds payable. So this will give you the idea of what the bonds outstanding were as of this time. One thing I want to bring up is the fact that in the sewer fund, the current bonds payable of $260,000, and then the due in more than 1 year, $7.3 million, I believe has increased since then, because I believe is it Macomb County Public Works?
Yep.
Has issued additional bonds, 4 additional bonds, that has increased that amount also. So while you are making payments on the current amounts, you have also continued to incur things out of your control based on what the county DPW is doing. They call it the county DPW? Or Public Works, sorry.
So we're, because we signed an agreement with them, no matter how much
Yep.
they spend, we then have to pass it through to the taxpayer.
Correct.
Okay, so if, with the new water authority, and renegotiation of rates, that's irrelevant to the fact that right now they're expanding and doing several bond issues. So we'll still have to continue to pay this.
Correct.
Okay, thank you.
That number,
Which number?
7.3 million.
Yes.
This is within 1 year? Doing it more than 1 year?
No, the due within 1 year is the $260,000.
Okay.
The $7.3 million is due over that's the remaining years of the bonds, yes. Which there's many different bonds that will mature at many different variable times.
Can I ask you a question?
Yes,
Those, the blank in the water,
yes.
I don't see a negative or a positive, it's just blank. Is there a reason why it's just blank?
It is blank because you cannot show a negative amount. Based on what our reporting requirements and generally accepted accounting principles require, we cannot show a negative cash balance. So, if you look under the liabilities, you will see second line down what's called due to other funds. And if you look into the sewer fund, you will see an amount there of $312,000. If you look in the water fund, you will see an amount of $743,000.
That means our deficit is now those two.
That means, no, that's just simply stating what is due back to the general fund, because that's where those amounts are due to. If you're talking about overall deficits, you have to take a total picture of capital assets, net against the debt that's been incurred, all that information combined. Yes, that is why there is no cash. Except for the restricted amounts, the $228,000 is there. It is restricted based on the bond requirements. Older bonds and the new bond, which was the dwarf bond that was issued. That goes back to that non-spendable amount that I was referring to, because you can't just sit there and take a look at your general fund and say you have $2.2 million available to spend. $1 million of that is here.
Okay, that was going to be my next question. So when we look at the difference between a general ledger and a bank account, right now, in the general ledger, we ourselves owe the general ledger basically $1 million to that water or the water and sewer fund. Owe the general
Fund,
fund
yes,
$1 million.
yes.
Yeah. When do we pay that back?
Whenever you collect enough money to pay it back. That is part of the long-term planning that these gentlemen have referred to in regards to discussing overall operations. That is basically the hard choices you as the council get to make.
Thank you. With the transfers between funds at every March 31st, and this is something you can't answer for this council, but typically, is it a favorable thing for us to be borrowing between funds? Because that seems to be what we've done over the course of several years, and unfortunately, that led us to where we're at right now. Is it more that we should focus in on bringing in those operational expenditures than trying to transfer our problems away?
It's actually up to the council to decide. If you want to use your operating taxes to fund the sewer and water operations, it is permissible. However, the sewer and water fund and now the garbage fund are supposed to be self-sustaining. That means you are supposed to be able to charge an amount of billings, whether you want to call it operating, where you serve, debt service fees. Different places have different titles. Break it out however you want on your billings, but they are supposed to be self-sufficient. You charge your residents enough to cover the costs incurred, including the depreciation or the wear and tear on the system itself. Obviously, it's hard to see that wear and tear considering water lines, sewer lines are buried under the ground. But the idea is to cover all operating, all debt service costs, which is why I pointed out the bonds in the way that I did. Any other questions? Okay, well then let's look at the revenues versus the expenses. Top line is your revenues. In the sewer fund, your revenues were $438,000. Operating expenses was $659,000. For an operating income loss of $221,000. By the time we add in the interest expense, that adds to another loss of $297,000. Overall, the sewer fund lost just under $518,000 for the year, decreasing its bottom line from $1.35 million to the $833,000. Water fund, $753,000 came in. $620,000 was charged for operating operating income of $133,000. Take into account interest expense of $71,000. Overall gain was actually $62,000 for the water fund, so that actually experienced a bit of a gain. And then the non-major funds, will break that out between the building and the trash in just a moment. But obviously, if you're looking at your sewer fund, that $500,000 should stick out to you. And it will only continue, as I mentioned, with the debt get worse because your interest expense will continue to increase. Not to mention the increase in your normal day-to-day operating costs and cost of living things, all of those things, price of gas, etc. I know it's hard to say price of gas since it's come down, but it's just all of those extra things that seem to continue to go up. If we go to the next page, we'll briefly look at your non-major governmental funds. They consist of two funds, the drug law enforcement and the perpetual care. These are amounts that are restricted specifically for drug law enforcement and the perpetual care at your cemetery. Self-explanatory, luckily, so I don't really want to spend a lot of time on this. If you go to Exhibit M on page 47, which is the next page, you'll be able to look at what happened with the activity. $52,000, it comes in regards to fines and forfeits. $17,000 is spent. The bottom line at that time now is $40,000. Now the other thing though at this point is obviously this was done prior to the police department being contracted out with the county. So I'm not exactly sure what the status of this fund is at this point or what was worked out with the county, so I'll leave that alone for another time. What?
Like a zero.
That's what it should be, I imagine, but I didn't audit that time period, so I'm not going to make any statements on it. Next page, you're looking for building and garbage. The building fund has $99,000 in cash. However, it has amounts owed to other entities of $80,000. So its overall bottom line is really only $17,000. The amounts that are owed we'll discuss in just a moment. Garbage fund, $4,000 in, $35,000 is receivable, is the monthly billing that comes out and is still due. So it's got a bottom line of $39,000. If you